This morning, Dean Kim, head of global research product at William O'Neill, is with us. Dean, good morning. Great to have you on the show as always. You know, we've been debating this over the last couple of minutes. I don't know if you could hear us already, so I'll straight away get to that question. As we're looking at the second half, August onwards, I think a lot of people here in India are wondering whether the money will keep flowing into this market or whether China is now attracting more eyeballs and more wallets, because suddenly in the Chinese market, Hong Kong and even the mainland markets, they have started doing really well. What's your sense as you look at the next couple of weeks?
Yeah, China certainly has provided some stimulus, and that seems to be getting the market going. However, you know, I was just looking at the GDP growth forecast for China versus India. And India is still stronger in terms of GDP growth heading into next year and beyond. So I think China has more work to do in terms of providing more stimulus to its economy. And if they were to come out with more stimulus, that could be good news for the market, and perhaps that could sway the liquidity over to China. But as we're currently sitting, I still see India as really good performing market. Now, in terms of U.S., I think we're looking forward to better performance in the second half, primarily because I think we're over the hurdle in terms of some of the negative shocks that may have come out in the Q2 earnings. For instance, regional banks. There was a lot of worry about regional banks. But they pretty much came out unscathed on average, and I think when you think about where the Fed is going, they may stop raising rates. We'll see in August, but that they may be in terms of done in terms of rate hiking cycle. So in the meantime, I don't see any kind of weakness that would propel the economy into a hard landing. When I look at bank results, asset quality is fairly benign. It is lagging indicator, but when you're looking at very strong employment numbers, corporate earnings have been reporting very well so far. So I think we're pretty much set up for this rally to continue in the second half.
Okay, set up for the rally to continue in the second half, and what a rally it's been, right, Dean? You track the technicals of the market closely. So on the Nifty, it's been, what, a 10% rally in just 3 months. Do you have your sights set on higher levels in a shorter span of time? And what are the targets that you're looking at on the Nifty, say, over the next couple of months?
Yeah, I mean, we don't do forecasting as such, but we look at technicals very carefully. And right now, the Sensex is holding up very well. Next support is a rising 21-day moving average, which is 1% away. So what I would say is, as long as the index can find support at that 21-day moving average, we're still go mode, right? And the next resistance is the recent high at 67,600 or so on the Sensex. What I would say is, there's a lot of stocks that are performing well in India. But I think it's time for us to, kind of take a look at the technicals. And if a stock is trading, let's say 40 to 50% above its 200-day moving average, and you see a down day, perhaps that's your signal to start trimming. I would, take that as a funding source to look for stocks that are breaking out from early stage bases, and there are plenty of them out there. I would pay attention to that kind of signal. Don't be complacent and hang on to those stocks that are trading way above the 200-day moving average, right. Because when they consolidate, they come down pretty hard.
All right. Hi, Dean. Morning. You want to name a couple of those stocks in the past? I think you've said Tata Motors is something that you've liked. You were looking at Reliance as well as Maruti. So stocks that you like and stocks where you've taken some money off the table.
Yeah, I think Tata Motors is the clear example. It's a bit extended, so perhaps it's time to trim a little bit. I think there are other stocks out there, such as Titan Company. You have IndiaMart. They're both on the retail side, and on the cap equipment side, you have Siemens, Thermax, SKF, Grindwald. So those are, fairly good names just breaking out from early stage phase. So those are the types of stocks that I would kind of take a look at the moment. Now in the autos, if you like the auto sector, I think Ashok Leyland as well as UNO Minda, those are opportunities. And then on the technology side, perhaps Coforge.
Okay, Coforge, got that. Thanks a lot for joining in, Dean. Appreciate your thoughts as always.